All right, good morning, everyone, and welcome. My name is Jeff Meisner. I'm with Avalara. Thanks for attending our webinar this morning on 6 things developers need to know about marketplaces. Joining us as our presenter today is Aaron Robles from our partner launch team. Aaron is one of Avalara's leading experts on marketplaces, and he'll use the next hour to guide you through everything you need to know about marketplaces before you ever write a line of code. Before I let Aaron dive in, I just want to go over a few housekeeping items. First off, we are recording today's webinar, so if you want to listen to it again or even share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be completely customized. Feel free to move or resize any of the windows. Along the bottom of the screen, you'll see several buttons or widgets. I won't go over all of them, but did want to highlight a few. The purple Q&A button, this window should be already on your screen to the right of the presentation slides. Use this box to submit any and all of your questions. I will answer the ones that I can, or have Aaron answer the ones that he can, normally of a logistical nature. And we have a few of Avalara's sales tax automation experts online today who will be responding to your questions individually. Green resources, below the Q&A window is an additional resources section. That's where you can also download today's presentation slides if you'd like to save them for later. And we also have links to some additional resources on sales tax if you'd like to dive deeper into the topics we discussed today. The console will disappear at the end of the webinar, so if there are any you'd like to check out, go ahead and click on them now. They're open in a new tab, and we will be waiting for you when the webinar is over. Finally, there's a yellow help button at the bottom of your screen. If you have any technical issues, you can get answers to frequently asked questions there. All right, and now I will turn things over to Aaron. Go ahead.
Hi, everyone. This is Aaron, and I'm, as Jeff said, on the partner launch team. I've been working with business development, and I've been assisting integrate our technology partners for the last 6 years. Today, we're going to talk about the complexities of sales tax as they relate to marketplace facilitators. So before we dive into 6 things that the developers need to know, we're going to talk about the decision that kind of affected everything and started the ball rolling towards the complexities of this landscape. So on June 21st, 2018, as many of us are aware, the Supreme Court essentially overturned Quill and mentioned that the physical presence rule in the initial Quill ruling was unsound and incorrect. The key takeaways from there was that physical presence was no longer a requirement, but it was still, however, relevant. So that complexity didn't go away. However, we just added more complexities. Economic thresholds were instituted in many states, many of them being in the range of $100,000 or 200 individual transactions. And it not only applied to online sellers and individuals who sell things, but it also applied to goods, digital goods, as well as software. The laws enacted didn't actually only affect individual sellers, but they also affected marketplaces and platforms where sellers decide to sell their goods or services. So many states now have laws on the books that require marketplace facilitators to collect tax on behalf of sellers operating through their platform. Typically, the requirements are going to be around the idea of collecting revenue on behalf of the seller from the customer, as well as managing a multitude of activities related to the selling process. Key provisions relate to the collection of sales, and most states either have a similar or not too dissimilar threshold, or they just bundle it into the same threshold as far as marketplaces are concerned that exist for individual sellers. So this map kind of shows that fast forward from 2018. Many of you might have already been familiar with this map on one of our sites, and if you've seen it before, one thing that you'll notice is that it has changed incredibly quickly in a small amount of time. I would venture to say it's probably one of the fastest changing legislations that I think the country's ever seen, and that we've kind of just seen a sweeping overall of these laws impacting all of these different states.
Great, and so I'd like to just ask everyone if they feel like it to participate in this poll. And essentially, we'd love to know what marketplace platforms your organization uses. Amazon Marketplace, eBay, Etsy, Facebook, Instagram marketplaces, the Walmart marketplace, or a proprietary or homegrown marketplace platform. So just I'll take about 10 or 15 seconds to let everyone respond, and then we'll let you know what the results are. Okay, so looks like people have voted. Great. About 25% are in the Amazon Marketplace, 8% on eBay, and a whopping 83.3% on proprietary or homegrown marketplace. That makes a lot of sense. Great, thank you. All right, I'm going to turn it back over to Aaron.
Thanks, Jeff. So now that we've kind of gone over the background of how we got here and why we're all wondering, what 6 things a developer needs to know when building an integration for a tax service for a marketplace, let's take a look at the individual models of how you can integrate a marketplace with AvaTax. So when we're talking to marketplace partners, there are 2 account models that we use to kind of simplify things. We've got a partner-managed model and a merchant-managed model. In the partner-managed model, a marketplace facilitator typically maintains a single AvaTax account for both the transactions where the marketplace is responsible for the tax collection and remittance, as well as the facilitating tax transactions and calculations for merchants that are transacting on their marketplace. This is opposed to the merchant-managed model, where the marketplace facilitator also maintains a single AvaTax account for the transactions. However, in this case, they also have the ability for individual merchants to have their own direct relationship with Avalara and have their own Avalara AvaTax account. So taking a closer look at the partner-managed model, you'll see that there's 2 distinct company profiles, one for the marketplace facilitator and another for merchants on the marketplace. On the marketplace facilitator profile, you'll want to enable Nexus in the states where the marketplace is responsible for collection and remittance of sales tax, and you'll also need logic on the client side or the integration side to send transactions in marketplace facilitator states to the marketplace facilitator profile. Nexus configurations are typically going to happen within the actual integration itself, and the gating function is required on the client side to be able to have essentially a if this then that behavior. So if the merchant has identified Nexus, yes, then go to the marketplace merchant profile. If not, then circumvent the tax calculation altogether. In the merchant managed model, where you're the marketplace facilitator, the if this then that logic or the gating function that's on the client side is a similar scenario. However, the parameters change. The if this then that question is the transaction within a marketplace facilitator state? If yes, then send it to the marketplace facilitator account or company, and then if no, send it to the merchant account or company. Merchants on marketplaces that have their own AvaTax account will have the ability to maintain their taxability requirements and their tax profile within their individual AvaTax account. The transactions will be funneled into their AvaTax account, where they can then do their own remittance and reporting, or they can engage Avalara to provide that service for them. Now, things get a little bit tricky when there's an ability for multi-merchant checkout. So imagine a scenario where your marketplace allows a customer to place an order where they can buy multiple things, and let's say there's 5 things and all 5 of them are for different merchants and different sellers. When calculating the tax, you have to process each merchant's portion of the order individually. Those would be separate tax calls. and then you would compile all the results and show them as a display to the customer. So the customer should see a single amount of tax and single amount of shipping, et cetera, et cetera. However, on the back end, you split it out into multiple calculations to ensure that one merchant's calculation isn't affecting the other. Now we're kind of going to go into how to capture that activity for remittance and reporting purposes. So the calculations of all the transactions that happen on the marketplace through AvaTax are all a means to a compliance end. So when it comes to the partner managed model, you're providing calculations to merchants. However, you're not typically going to be recording the transactions in AvaTax. So to make sure that you can facilitate the needs of the sellers there, you want to make sure that you have reporting available from within your system or your platform that will allow merchants to understand how much tax was calculated and collected for their own remittance purposes.
Great, Aaron. We have a question from Kevin Harris. Kevin asks, how does the setup change when a marketplace state requires the marketplace to report facilitated sales separately from marketplace sales?
Facilitated sales separately from marketplace sales. So sales that a individual facilitated sales separately from marketplace sales. So a sale that happens on a marketplace that they facilitated versus a sale that happened on the marketplace that they didn't facilitate, I suppose.
Not sure, Kevin, if you want to clarify your question, then feel free to do so. We will also be sure to get back to you with the answer as soon as we can post-webinar. Okay, and we'll continue.
So as far as the merchant managed model, You're okay.
Okay. Go ahead.
So now we're going to kind of dive into handling refunds and the impact on the marketplace. So whether it's partner managed or merchant managed model, the good news is that the framework is kind of already there between our different APIs. We've got some good documentation around refund transaction versus the actual return invoice. At a high level, refund transaction is kind of a shortcut, so to speak, where you target a specific transaction that's already been posted to that AvaTax account, and you tell us to create a reversal of it. You can include parameters such as it's a partial, it's a percentage, target a invoice and only do a refund for a specific line or set of lines, things like that. However, if you require the ability to do, for example, a scenario where you can have an infinite amount of refunds on a single transaction, it's just, possible. In that instance, in other more complex scenarios, you'll want to go with return invoice, and you want to create the body of the request kind of from scratch. That way you can tailor the refund to your business needs.
Okay, and again from Kevin Harris, he says processing fees are a direct sale of the marketplace on a facilitated for a third-party merchant. Illinois and some other marketplace states require these sales to be reported on two separate tax returns to the state. I think he's clarifying his last question.
Got it. Okay. So in the event where a marketplace facilitator conducts direct sales through their own platform, they'll want to create a third company. We didn't go over this because it's not the typical, but rather the exception. So they'll want to create a third company, and in that company, they'll funnel their direct sales only into that company. They'll typically have a separate EIN, and those will go into their own tax return. They'll need to also understand from a client-side logic perspective that there are many states where the marketplace facilitator sales and the direct sales actually should be combined on the same form. So the logic on the client side will need to be intelligent enough to know only send direct sales to the direct sale company within the marketplace AvaTax account when it's a state like Illinois or a few handful of others, as opposed to a state like Washington where it's all one form.
Great, thank you, Aaron.
Mm-hmm. Yeah, that's all I've got for refunds. So now, even better news, there are a variety of open source integrations that already exist for AvaTax that can kind of be used. So we'll kind of go into that in a little bit of detail as well. So with over 700 integrations and counting that we have kind of in our portfolio, there's a pretty big chance that if you are operating a marketplace, you're operating it on a platform where there's already an existing open source integration that you could leverage. Of course, you'll need to do a little bit of development work to support any complexities that your marketplace might have. But at the end of the day, big platforms like Magento and Commerce and Spark and others have existing integrations with AvaTax that can be leveraged in our open source. The only other thing that I'll touch on here is that even if you're on a homegrown platform and you're building it all yourself and there isn't an existing integration to leverage, it's really as simple as handling 3 different endpoints. As far as the way you interact with AvaTax, the complexity around building an integration for a marketplace is really going to be on the if this then that behavior and dependent on how complex your scenario is. But for us, it's as simple as using between 2 to 3 API endpoints.
Great, and so we've reached the end of Aaron's presentation, but it went a lot faster than we thought it would. Aaron, maybe you could talk a little bit about what is driving this adoption of these marketplace facilitator laws and the proliferation of marketplaces.
I think at the end of the day, many of the tax authorities and states have kind of realized that a vast majority of transactions are not only happening online, but they're happening on different platforms where people can post their goods or services for sale. I think, within probably like the last 10 years, we're kind of now seeing the tax authorities kind of wake up and understand that between, online sales and, platforms like Amazon and Etsy and others, we've really kind of seen a sort of like a democratization of the ability to, have a business. Mm-hmm. And more more businesses are starting to kind of survive and thrive off of the idea that you don't sell in one place, but you sell across a bunch of channels. I've talked to a few sellers that, they sell on Amazon, Etsy, eBay. The number one thing and reason why I hear that they will sell everywhere as opposed to trying to have their own website or, a retail store or a pop-up or something is that, simply put, it's more efficient for them to post their stuff everywhere and have a bunch of channels where they can bring in revenue as opposed to trying to spin up like their own marketing, campaigns to try and get traffic coming to their properties. They may as well put their stuff where there's already traffic happening. Like, essentially, like Amazons and Etsy's and eBay's of the world are kind of doing their marketing for them.
Gotcha. And if you're a developer who's trying to build a tax integration for a marketplace, what are kind of the first things that you would recommend them doing?
The first thing that I would do if you're a developer, and I'll put it 2 different kind of perspectives. If you're a developer working for the individual marketplace already, chances are you've probably got a fairly, robust understanding of the place that you work at, of course. However, chances are also that you probably haven't really been attached to the hip with the finance or the accounting side of the house. And one thing that tends to be quite a challenge is to have developers understand the difference between API fields and which ones are required and optional. And then there's kind of this gray area that I like to call compliance required, where a field that might be optional in our API is actually required from a compliance perspective.
Gotcha. And it looks like Kevin has another question. He says, some states term marketplace sales as sales tax and some as use tax. What is different in the setup to designate the tax as sales versus use tax?
So as far as AvaTax goes, when you go to set up your nexus, there's essentially 2 options: sales tax only or sales or seller's use. From an engine perspective, what happens if you set your nexus up in that way is that any transactions that hit that AvaTax profile where the ship from and the ship to are within the same state will automatically be considered sales tax because that's an intra-state transaction, as opposed to transactions where they came from outside of the state into that state. So like the seller was in Washington, but the buyer was in Texas. That will automatically be seen as an interstate transaction and will calculate the use tax rate. In scenarios where both of those kinds of tax go on the same form and then there's only one form, we handle that automatically as far as the nexus goes. Some states like Virginia have one form for sales tax and another form for use tax. In that instance, as a marketplace, you want to be sure that you understand how you're registered in that state, because that will dictate the form that you need to file there. And then in the case of states like Virginia, it will also dictate the nexus setup. So for example, if you get registered as a marketplace in Virginia and they tell you to get the same registration as a remote seller would, that means that you're going to be filing the seller's use tax form and not the sales tax form, which means that you'll want to set up your nexus profile within Virginia as sales or seller's use to ensure that we can actually calculate that appropriate tax.
Great. And we have another question from Tom Mathia. Tom asks, what percentage of states use the $100,000 in sales threshold?
I don't have an exact percentage handy, but I would say it's the lion's share of them, absolutely.
Great. Yes, please keep coming with your questions. We still have plenty of time. Aaron, I'm curious, what are the most typical questions you get from developers or that we get from developers about marketplaces?
The number one question that I tend to get is, what fields do I actually need to send you to build this out? Developers always just seem to be very keen to not build anything that they don't need to build.
Right.
So, then that might be, an efficiency thing. It could also sometimes be pressure from the other areas of their business, trying to drive a very aggressive timeline. I've seen aggressive timelines happen a lot with these because there's just a lot of pressure from a lot of marketplaces that realize that they are suddenly they're out of compliance. And so it's kind of a race to get out in front of the audit, so to speak. So that gray area of understanding the difference between a API technically optional field and a compliance required field is kind of where my team's expertise comes in, because we can kind of advise on that gray area of, yeah, I know the API doc says that this isn't technically required for a tax call to go through. However, you need to send it to us for this reporting reason. Which is kind of going back to the other thing I mentioned of oftentimes it's super helpful for the developer who's building the integration to be tied closely to the finance and accounting team of that marketplace platform to make sure that they're getting their requirements for what they're building from the people that know the compliance needs and what they need to see and what, more importantly, auditors and the states want to see.
Right. So they need to understand the business conditions
exactly.
before they start to build something.
Yep.
Correct. Okay, looks like we have another question. Okay, this is from Maria May. Very common question. Where do you get the sales tax rates?
So as far as the marketplace platform that's building the integration, they're getting rates, absolutely, but more importantly, they're getting actual tax calculations and determinations. The reason why I say that is that, for example, if you're doing an invoice where you're shipping into Washington, D.C., and you've got a $100 line item that was physical and taxable, and then you've got a second line item that's $100 physical and non-taxable, and a $10 shipping charge, only half of that shipping charge is going to be taxable in that specific jurisdiction. If one were to leverage just the rates and try and just do the math themselves, they would get it wrong. And they would get it wrong in a vast majority of states where that mixed taxability happens. Same with, clothing thresholds in New York and Massachusetts. Same with threshold laws within Tennessee, within Florida, and a few other places. So at the end of the day, the sales tax rates are coming dynamically from the API calls that the integration that the developer builds is making as sellers make sales and buyers purchase things. But that is really less important than the amount of tax that we're responding with through the API. That's where the rubber meets the road, so to speak.
Great. And Aaron, I'm curious, how long does it typically take from, first contacts for a developer contacting us to, deployment of their, build tested deployment of their integration? What's kind of a typical timeline for that?
I get that question a lot, and this is right around the time during the kickoff of the partnership where I start to apologize for how many times I say it depends.
Right.
Because in the land of tax and then also building integrations, it really does depend a lot. So like with regard to, velocity for that, it's really dependent on the complexity of the marketplace scenario as well as the, amount of resources available for the build. Is it a single developer kind of doing it in their spare time because their like quote unquote day job is, maintaining other things? If so, that's going to take longer. Is it a team of developers that have actually, developed something like this before, and this is their dedicated function until it ships? Then it could be as quick as, 30 days. So I've seen it go as quick as 30 days, and I've seen it take as long as 6 months. It just depends on how complex the scenario is and the amount of resources that are dedicated to the project.
Great. Okay, cool. All right, and Kevin has another question. Kevin Harris asks, what setup is required to designate only the marketplace sales for B&O tax in Washington versus all of the sales of all of your merchants?
So in that case, you would want to leverage that same kind of concept of a direct sales company. It's a very good question. A marketplace facilitator cannot file Washington B&O tax on facilitated sales. The reason being is that B&O tax and that particular kind of remittance, it's really a gross receipts tax. So if you think about it, the marketplace platform, like let's just go with Amazon as just an example. Amazon has no idea what the gross receipts of every single seller selling on their platform is. Only those sellers do. So there's no way for the marketplace facilitator to file gross receipts or B&O tax in Washington for all the transactions that happen there. With that understanding, the marketplace facilitator is responsible for filing B&O or gross receipts in Washington for their direct sales, as Kevin mentioned. So what you'll want to do to facilitate that need if you are doing direct sales as a facilitator in Washington is leverage that same third company where you have all your direct sales going into. And what you'll do is you'll just make sure that if a direct sale happens in Washington, funnel it into the direct sale company, where you can then have us either provide reporting that's accurate for B&O, or we can file it on your behalf.
Great. And Maria May has a question. She asks, how do you manage the sales tax for rental of uniforms in California? Well, that's a very specific... it's a very specific use case.
What I can say is that we've got a variety of tax codes within the AvaTax engine. It's kind of one of the mainstays of why we are who we are. There's a website called taxcode.avatax.avalera.com that I think we can maybe put as your answer into the chat.
What is it? Tax code?
Taxcode.avatax.avalera.com. So this is kind of a two-pronged answer. First prong is go to that website. Go to that website anytime that you want to be able to look up which tax codes are available that we support and what kind of content is there for what you're looking for. That being said, if you see a code in there that we actually support, we've got an entire team of content researchers and engineers that are, on a monthly basis maintaining the taxability, rates, rules, thresholds, and things like sales tax holidays. I know clothing, that happens a lot for clothing, across the entire, every country that we support. So we will maintain the rates, rules, and thresholds and all that good stuff for any specific code that you see on that site that we support.
Right, and what you're describing, Aaron, really goes to the basic value prop that Avalara provides, which is, if you compare our engine to, just regular old tax rates or zip code level accuracy, ours are rooftop level accuracy because We have, I don't know how many people on the tax laws content team, for lack of a better term, that are constantly keeping this stuff up to date, but they do as their full-time job.
And one thing that I'll mention now that I'm thinking about tax codes as they relate to marketplaces is, unlike a direct relationship where we are helping an individual business that is working with Avatax to manage their compliance needs, in that instance, we would typically map tax codes to every single item that they sell. Now, you can imagine as a marketplace facilitator, there's essentially a infinite amount of items. You never know.
Right.
You know, people are posting stuff on there all the time. So what our recommended approach for marketplaces that are trying to have, manage taxability with Avalara is to take a step, kind of a higher, zoom out one level from item to categories. Most of the time when you go to a marketplace, there isn't an infinite amount of categories that you can post an item into. There's like maybe a couple hundred at most. So our approach is to map the tax codes at a category level as opposed to an individual item level. That way, as sellers post things on there for sale, as soon as they choose the general category that the good or service that they're trying to sell lands into, unbeknownst to them on the back end, they're also essentially picking a tax code that comes over to us.
Gotcha. Okay. And we've got another question from Mark Matheny. Hope I didn't murder his last name there. Several times you have mentioned a quote-unquote separate entity. Is this an actual separate entity with a separate EIN or tax ID and registered separately with the state, or is it just a separate entity as far as Avalara is concerned?
Mark, this is the part where I apologize for saying it depends, but it depends. So, like in a state where it's Washington, for example, it could be a separate EIN because you would be filing gross receipts if you're doing direct sales in Washington, and the assumption there that that would be a different entity than the marketplace facilitator, since it's a different form entirely. This is opposed to a different state where you can kind of co-mingle the transactions on a single form. As it relates to that, it's kind of the facilitator's choice whether they want a separate entity as far as Avalara is concerned, or what I would call a separate company profile, or you would have a single company profile if you can kind of mix and mingle those transactions on a single form.
Great. And Aaron, I'm curious, I mean, you're kind of an expert on marketplaces. What do you see like down the road? Like if you had to make one or two predictions on things for marketplaces down the road, what would they be?
Well, one thing I can say is that in the beginning, when the laws were first starting to be adopted, and it was like 5 states, many marketplace facilitators were making the choice to only get registered in those 5 states and then kind of either leave the merchants who sell in other states kind of on their own, or to allow Avatax to calculate taxes within those states where they're not registered as a marketplace, but still not include those in the marketplace facilitator's own filings. Fast forward, I'll stop there and just say what I just described as far as the development level of effort is concerned is extremely complicated, because it involves an ever-changing if this then that tree of logic that sits on the client side of knowing like, oh, well, Florida now adopted the law, so change the logic to where Florida sales go to merchant, Nexus company, and instead go to now marketplace facilitator company. So it's a manual effort. It requires researchers or people to kind of keep an eye, like on our site or other sites, the state sites, and it's just overall complicated to maintain. Fast forward to now, I think there's only around like between 5 and 8 states that haven't adopted the legislation as far as marketplace facilitators go. And so we're starting to see a trend where marketplace facilitators are taking it upon themselves to just get registered, quote unquote, everywhere and file and remit taxes on behalf of the sellers everywhere, because there's just less and less states that don't have that law yet. So like in Florida, I've seen many marketplace facilitators just reach out to the state and say, I'm a marketplace, I'm going to get registered as a remote seller. And the state is like, we love money, so go for it.
Right.
And then they just do it. And it makes the development effort easier, it makes the need to track the changes and change your client-side logic also easier. And it just overall makes things way more straightforward. So I think really Missouri and Florida are kind of currently the wild cards, so to speak, on like will they have the legislation by the end of 2020. But if I were to do an over-under on whether or not we're going to see every state with that law, I would put money on every state having that law by the end of 2020.
And it's simply to generate more tax revenue, right?
Exactly.
Yeah.
I mean, it's incumbent upon them to kind of fill their coffers, and this is just money they're leaving on the table.
Okay. All right. Well, I don't see any more questions. Aaron, any kind of final thoughts you want to leave folks with before I talk a little bit about some of the resources we have for developers?
Really just make sure that as you start embarking on a project where you're developing an integration for compliance reasons, as it pertains to a marketplace, make sure to get your requirements from the accounting/business/tax people if they are roles at that platform's place of business, because oftentimes I have seen a developer kind of go off to the races without a clear understanding of the business requirements, and they'll develop something that, while technically works, they'll miss those gray area like compliance required fields and API calls. They might trigger the workflow of when a transaction is actually finalized to us at the wrong time. I've seen for example, I've seen a few developers, no discredit to them at all, it's just not their world. They would do the committal process of the transaction only when the item was shipped, not when payment was received. And we would end up seeing discrepancies in reporting, because the accounting side of the house, that marketplace being an accrual business, they were expecting the dates and the reporting of those liabilities, not only on our side, but in their GL, to be specific to the date of like the actual sale, the date when money was exchanged from the buyer and the seller. And then they were actually seeing that oftentimes, like if a buyer purchased something that was like for some reason back ordered, they would see a transaction that the accounting side thought should be in March show up in like April's books. And then that would also then have kind of a knock-on effect with like if there was a refund, because then the refund's in the wrong reporting period as well. So, little things like that seem innocuous can have big effects. So
know your business requirements, devs.
Know your business requirements, yeah.
Okay, great. All right. Okay, so that kind of brings us to the end of our presentation. I just want to point out a couple of resources we have for the developer community. We have a really great interactive API demo on our developer website where you can test various scenarios of shipping different products to and from different places, and you can use different programming languages there to get a submission and a response, code response. Then we also have a 60-day AvaTax free trial that gives you unlimited API calls for 60 days and also gives you a production environment where you can build and test your integration. So I highly recommend, if you are in the early stages of building an integration, that you sign up for a free trial. We also have a number of on-demand webinars on our developer webinar hub that we've done over the last year or two. We have webinars on shopping carts, on ERP, point-of-sale platforms, supply chain management, and we're going to have pretty soon a updated webinar hub with upcoming webinars on the basics of the Avalara API and point-of-sale and ERP platforms and so on and so forth. So I highly recommend you check that out. And then last but not least, I don't know how aware everyone is of this, but we have a great annual tax compliance conference every year with a dedicated developer track that usually has a handful of sessions specifically for the developer community. They are really, really great sessions, and I highly recommend that if you want to immerse yourself in the world of tax compliance as a developer, and if you really want to look like a developer hero, then that is the place to go.
One thing I can add there, Jeff, is that I'll actually be at Crush as one of the presenters for the developer track. We intend to have a track dedicated to marketplaces because
that's right,
it's very complicated. So you guys can, show up and pick my brain about that, as well as my colleague Stefan and my director Mark. And I think that's the only thing I can think of as far as Crush. You just made me think of that.
Okay, great. All right, just a few final reminders. We'll be sending the recording of this webinar within 24 hours. And we understand, as Aaron just mentioned, that marketplaces is an extremely complex topic, especially for developers. And if you need to build an integration for a marketplace, you really need to understand the business requirements around doing so before you ever write a lick of code. So don't hesitate to reach out to us if you have any questions. There is a blue button at the bottom of the screen that you can use to send us email if you have any questions or would like to learn more about Avalara. And then a survey will pop up at the end of the webinar. We'd appreciate your feedback on what you thought of today's webinar and did it deliver what you were looking for, and would love your ideas for future topics that you'd like to hear from our tax compliance experts and our engineering team. Aaron, thanks so much for your time, and thanks to everyone on the line. I hope you walk away with valuable information and that you'll join us for one of our upcoming webinars. Everybody have a great day.